Hello everyone. Thank you, Jim, for the invitation, for the opportunity to speak here, and I hope my presentation will be interesting for you. You know that the whole world is changing dramatically, and the financial industry and investment industry is changing too. Today we can see how develop such new technologies like blockchain and cryptocurrencies, financial marketplaces, robo-advising, algo trading, crowdfunding and crowd-investing. So about algorithmic trading. It has been a long time ago when the first transaction on the financial market was executed automatically in about 1970s. And from that time, these methods will be very popular just because many traders started to use such technologies in many hedge funds because mistakes and experience of previous algorithms can be taken into account for the new programs. On this slide we can see that large portion of financial transaction on the US financial market using algorithmic trading. We can see that in some cases, in some markets, the penetration is more than 50% today. And for example, in Forex exchange futures volumes, it is more than 80%. So it became more and more popular, not only in the US, of course. We can see the same trend also across Europe and Asia. And for us, it seems that algorithmic methods will be kind of inevitable future for the global investment industry. Here you can see the growing trend of assets under management of algorithmic hedge funds, and as today is about more than $800 billion in asset under management of such funds. And according to McKinsey forecasts, the total amount of assets under management by such hedge funds can reach $2.2 trillion by 2020. It's also interesting slide. It shows the performance, the annual return of two, maybe the most famous investment companies. One of them using quantitative methods, Renaissance technologies, and another one, Berkshire Hathaway, that use classical methods. And we can see here that in some cases algorithmic methods may be even more profitable than classical methods. And as I think that may be more interesting that we can see that on the large part of the graph they are negatively correlated. And such new technologies like blockchain would help us to connect blockchain and algorithmic trading, and to help to provide algorithmic trading to a broad range of investors. So our concept looks like developer, quants, who develop such algorithm can develop such algorithm on his local computer. And after that, this algorithm can be uploaded on our platform, on cloud hosting. And from this cloud hosting, algorithm can interact with crypto exchanges and to get market data and to trade, to make investment decision. And also, we can connect every algorithm, every trading algorithm to smart contract on blockchain. Here you can see which information can be stored in distributed ledger in blockchain about each algorithm. For example, we can store the information about quant, about developer of this algorithm. What is background of this developer? We can also store the information about former performance. I mean backtesting performance, front testing performance, paper trading and live trading performance. We can store the information about deposit of this algorithm, initial deposit and current deposit of this algorithm. And all of this information can be available for investor. So this is the picture of our ecosystem. We are still developing this ecosystem. We are still a startup project, but in our ecosystem will be four main participants: quants, developers of algorithms, mentors who are experienced quants, who can share their knowledge, their experience with young quants. Also, angels investors and retail investors. Angels can invest into development of the algorithm on early stage, and retail investors can invest into tested algorithms. And what's also interesting is that smart contract can help to automate all of these transactions and all of these relationships between participants on our ecosystem. I mean, for example, if investor today should sign some paper docs like asset management agreement, but with the help of smart contracts, you can do it automatically. You can just put your assets under management of algorithm, and smart contract can monitor the results and spread profit between you as investor and between quant developer. So today Quantor, this is an ecosystem consisting of two main parts: the marketplace solution and educational solution. We developed educational solution part, and we are working now on the marketplace solution part. We would like to involve the knowledge of many people from all over the world to this platform and to involve them into economic turnover. So mentors can provide some educational courses. Young quant can learn this course and present the algorithms to investors. And the investor can invest some assets under management of such algorithms. We have a good team. We can see here Ernest Chen. He is guru of algorithmic trading and guru of backtesting. We also have such advisor like Kirill Ilinsky, who is quite famous physicist and financial manager, creator of Fusion Asset Management. So we also have advisors who help us to develop educational part of our platform, and we believe that such team can drive our project to the success. So this is our contacts, and I'll be happy to answer your question. And we are going to make our token sale maybe in about a couple of months, so you can see all the information about our token sale here on the website. And of course I'll be happy to discuss any partnership after my presentation. Thank you.